All right, let's talk about making your investments pay you, like right now.
So you've been investing for the long haul, right? But how do you actually get cash from it today?
Before we get to the good stuff, there's one big hurdle we got to talk about.
And that hurdle is inflation. It just quietly eats up your profits. So let's look at 5 ways around it.
First up, the one everyone thinks of, fixed deposits, the so-called safe option.
Sure, you get fixed interest, but once you pay taxes, your real return often can't even beat inflation.
Bottom line, FDs are for your emergency fund, not for generating real, spendable income.
Okay, option 2, a systematic withdrawal plan, or SWP. This one's for your mutual funds.
Think of it like a reverse SIP. Instead of putting money in, you're taking a fixed amount out.
When the market's up, great, you sell fewer units to get the cash you need.
But when the market's down, you're forced to sell way more units for that same amount. And that's super risky for steady income. It can drain your capital way too fast.
Let's move on to something you can actually touch: real estate. Hello, rental income.
That income is called rental yield, but the real money comes from that plus the property's value going up.
Don't have tons of cash for a whole property? Check out REITs. They let you get a piece of the action.
All right, let's talk bonds. They're kind of like FDs, but often with better returns that can actually beat inflation.
It's pretty simple. You're basically lending money to a company, and they pay you back with interest.
The biggest catch? The company could go bust. That's why checking their credit rating is a must.
And last up, something a bit newer: peer-to-peer lending. This one promises some pretty high returns.
You might see juicy returns, like 12%, but wow, the risk is high and there's no collateral.
Because of that huge risk, you'd only want a tiny slice of your portfolio here, if at all.
Okay, let's wrap this up with a quick summary. Every option here has its own risk and its own job.
So the right move for you? It really depends on your money, your goals, and how much risk you can handle.